All right, my dear friends. So coming to 40 capital A. 40 capital A, especially 40A2, speaks about excessive or unreasonable expenditure. So if the company SSE enters into a contract with, now that SSE can be an individual also, HUF, BOI, AOP, whatever we'll see. If that person SSE enters into a contract with the related party, then if the expenditure that he has incurred is excessive, what is excessive depends on what the AO feels. If it is excessive, that is beyond arm's length price, so to speak, then what will happen? 40A2 will get attracted. So if an expenditure incurred by an SSE towards goods supplied, services rendered, or facilities provided, three things are covered: goods supplied, services rendered, facilities provided by specified persons, assessing officer can disallow such expenditure to the extent he considers it excessive or unreasonable. Okay, that is what it is. Who all are covered here, my dear friends? SSE can be individual, SSE can be company, firm, AOP or HUF, SSE can be, all SSEs also. So for individual, relative is covered. Who is relative? So basically, guys, if you see Companies Act relative definition under 2 clause 77 of Companies Act, that is person and spouse. Then you have brother and sister, correct? And then one generation up, one generation down. So father, mother, son and son's wife, daughter and daughter's husband. For everything, stepfather, stepmother, stepson, stepbrother, stepsister covered. Stepdaughter is not covered. It is in company law. Stepdaughter was not covered there. Okay, step spouse and all don't write. Right? There's no step spouse seen. So it is only spouse and only one spouse. Spouse includes spouses, sir. What do you say? Singular includes plural and all. Don't tell. Okay. So yes, 2 clause 77. This is what it says. Then, on the other hand, in Income Tax Act, my dear friends, the relative definition is very simple. Relative here would be spouse of the individual, brother, sister of the individual, and not just one generation up, one generation down. Very, very exhaustive. Lineal ascendant or lineal descendant. So go up further, go down wherever you want. It is son, grandchildren, great grandchildren, great great grandchildren, father, grandfather, great grandfather, great great grandfather, everything. Lineal ascendant or descendant, everybody is covered. So if any individual enters into a contract with any of the relatives of the SSE and the expenditure is unreasonable, for example, the SSE hires his spouse to be the accountant of the company. Generally, that spouse is just studied BCom, but the pay is some 5 lakh rupees per month. Definitely unreasonable. Who will get 5 lakh rupees? Chartered accountants only won't get 5 lakh rupees initially. So they are paying 5 lakh rupees per month to the spouse who is just a BCom graduate. So the assessing officer can figure this out and say you're just doing it to reduce the tax. Hence, can disallow the excessive expenditure. He will say for this particular qualification, etc., maybe 60,000 is a salary maximum. So 4,40,000 I'm going to disallow. This is what the AO has to tell. For the company, firm, AOP, HF, director or relative of such director is covered. Partner or relative of such partner in case it's a firm. And in case of the AOP, HF, member or relative of such member will be covered. As far as other SSEs are concerned, there's an entire list. No need to study that, but nevertheless, I'll just give you a quick example here. So basically, SSE is a sole proprietor of a dry cleaning business. Let's take SSE as an individual. Dry cleaning business he has, yes. So who all are the related parties or relatives as covered under 40A2, my dear friends? Relative of the SSE, let's say Mr. A. Any of these people, if the SSE is entering into a contract with them, with higher amount, is getting, paying them something higher, that extra amount will be 100% disallowed. Next one, any individual can be his best friend also. Any individual or relative of that fellow. So if individual is Mr. B, relative of Mr. B is Mr. C. Now who is this individual? Random, my best friend cannot have, cannot be a related party. My best friend will be my related party if he has something called SI. SI means what? Substantial interest. Substantial interest. What is substantial interest? It is 20% of the voting power, my dear friends, not less than, greater than or equal to 20%. So, my best friend has invested in or he has control over 20% of the voting power of this dry cleaning business. So if I am paying something to my best friend in excess of what is allowed as per the AO, excess portion will be disallowed. Let's say the friend wants to cheat. What will he do? He will not, cheat the income tax officer, income tax department. He will not enter into a contract. He will make his relative enter into a contract. So individual has substantial interest, but he will send his relative to enter into a contract. They are also covered, right? Relative of B, such individual is also covered. Apart from that, any company, any firm, any AOP, any BOI, if it has greater than or equal to 20% of the voting power of the sole proprietorship, then they also will be related parties. Apart from that, any director, member, partner of such company, which company? A company which has substantial interest. So basically, a company owns 23% in this dry cleaning business, and the relative, I mean, the director of the company, is also employed in the sole proprietorship business or getting some consultancy fee in the sole proprietorship business. And if it is considered excessive, then that also will be disallowed. Apart from that, guys, relative of Mr. E also. So basically, if the company is D, director, member, partner of D, that is that company. Which company? That company which has substantial interest. Then relative of E is also covered, deadly. Apart from that, guys, so many other things are there. You see, any company, firm, AOP, BOI, HUF, they may or may not have substantial interest. That's okay. But let's say their members, Abhishek, Kritik, Alia, Karina, two of them have substantial interest, two of them don't have substantial interest. Doesn't matter. If they enter into, like Abhishek and Kritik, enter into a contract with the sole proprietorship, and the sole proprietorship is paying them some money, which is excessive, that will be disallowed, deadly. And apart from that, not only that, my dear friends, even relatives of Abhishek, Kritik, Alia and Karina, if they enter into a direct transaction with them, with the sole proprietorship business, that also is covered. So here Rakesh Roshan, then Saif Ali Khan, Ranbir Kapoor and the entire Khandan, if they enter into a contract with this company, they are covered. This list is really not important for you to understand, but you should know what all will come. So in case they ask anything like that, you should remember, okay, these things were discussed. No need to mug this up, no need to study it in depth, but just know this example is very important. Stick to this example, okay? Yes. Apart from that, holding company is a relative of subsidiary company and vice versa. And two subsidiary companies of holding company are also relatives. So Tata Motors holds substantial interest in T1 and T2. From the point of view of Tata Motors, T1 and T2 both are specified persons under 48 related parties. T1 and T2 are amongst themselves also specified person because they have a common parent who has substantial interest. This is what it means. So this is 40A2, my dear friends. So this is generally applicable to actual expenditure. But when a trade discount is given by a holding company to a subsidiary company, right? Trade discount is not recorded in the book. So sale price, if it's 100, trade discount is 20, I will record only 80, right? That is a sale. Or any expenditure is granted and any trade discount is given, etc. Then provisions of 48 will not apply because trade discount is a discount that is given from the sales. So 100 minus 20. That 20 cannot be considered as an expenditure. This is United Exports versus Commissioner of Income Tax, Delhi High Court decision. Payment of rent by a company in the capacity of a lessee to a trust in which the director of the company or also trustee will not attract 48. Guys, see here in this list, we have never seen anything with respect to trust. We only saw company, firm, AOP, BOI. So in this case, a company was paying or any SSE was paying some amount to a trust in which the directors of this company are also trustees. Is it 48? No, trust is not covered. These are some of the important points. In company law, we have related party relative definition in 2 clause 77, related party definition in 2 clause 76, and we have related party again in section 188. So there are separately given there. So here it is different, that is different. So this is what we need to keep in mind. That is regarding 40A. So if SSE company gives to a director who is 10 fail 70,000 rupees, but to the CA of that SSE company they are paying 40,000. So it's not fair. That's what it is. So 50K in this example, basically for 30K will be disallowed because he may feel that both should get the same amount, whatever it is. Or let's say the SSE to the director, this fellow here, he may fix this as only 20,000 rupees. Assessing officer will fix, no, for the director 10 standard fail guy, 70,000 is not needed, 20K only is enough. 50K will be disallowed under 48. There is an element of double taxation because AO will disallow 50K and then director will pay tax on 70K. But AO will disallow 20K. Sorry, 50K. 20K will allow. 50K now double taxation. 50K is tax in the hands of the company also. 50K is tax in the hands of the director also. Double taxation will come. Now SSC pays cash of 45,000 to some random person as an advance maybe. It is not an expense under 40A2, but 40A3, the next section, it is going to be disallowed. Sister concern, all that we have seen. As I told you, related party transaction is a wide definition in 40A2, whereas in 188 and all it's slightly different, and even in Ind AS 24, related party has a wide definition which covers both ALP and beyond ALP. In 188 it only covers beyond ALP, that's all. Alright, now coming back to 40A3. So guys, if I have bought an asset by paying more than 10,000 rupees cash in a day to a person, that will be deducted from my actual cost in section 41 we had seen. This is for an asset. However, if there is an expenditure towards some purchase or something, and if I pay cash more than 10,000 rupees per day to a single person, then that will be added back. That is disallowed under 40A3, where the SSC makes a payment exceeding 10,000 to a person in a single day, otherwise than by account pay, check or account pay, bank draft or use of electronic clearing system, no deduction shall be allowed in respect of such expenditure. Right? To a person, that's what it is. So if you see 15,000 rupees, if I pay cash, 40A3 disallowance will be there. Very simple, to one person. So if I pay 9,000, 9,000, 9,000, same person, same day, but different expenditure, mind you. I am not saying same expenditure. 27,000 rupees is the total amount paid, but 9,000, 9,000, 9,000 I am paying same person, same day, but guys, different expenditure, because the wordings are very clear. Expenditure more than 10,000. Do not get confused. Correct? Don't come back and tell me, sir, in some other book is written there. No book it's written there only. It's correct only. What I'm trying to explain to you is different. What they have written in the book is correct only. There they would have given one expenditure of 27,000, paid 9,000, 9,000, 9,000, same person, same day. Will 40A3 come or not? Yes. In my example, if they ask in the question, different expenditure. One is expenditure towards payment of some expense. Let's say buying raw materials. Second expense is payment to the same person who's also has one more business. He has some bakery. One I purchase raw materials from you. From the same person is another business, bakery is there. I'm purchasing items from the bakery worth 9,000 for my office function. Then similarly, the same guy, I'm purchasing something else 9,000. Three different expenditures. Can I pay it same person, same day? Yes. Same expenditure split into three bills, 40A3 will definitely come, disallowance. Three different expenditures, but given in 9,000, 9,000, SSC will give the same bill. The person will give the same bill, 27,000 to the SSC. SSC will say, okay, sir, I need three bills now because three different expenditures are there. Yes. 9,000, 9,000, 9,000. Different expenditure, same person, same day. 40A3 will not come. This is important. The 40A3 section very clearly says in respect of an expenditure for which payment is made more than 10,000. Expenditure should be more than 10,000. So here in my example, expenditure is just 9,000, 9,000, 9,000. Only if the expenditure is more than 10,000, then payment to the same person same day more than 10,000, then it's a problem. Right? So please be alert. Please don't come back with those doubts saying that in that book it's given like this book it's given like that. That book is correct only because there they would have given what? Expenditure is more than 10,000 rupees and expenditure is only one, not different. Then that's all. So if you see, as I told you, bill 1, bill 2, bill 3, different expenditure, 40A3 will not apply. Then 2 lakh rupees, you see here, 10,000, 10,000, 10,000, 10,000, no 40A3. Suddenly on 14th, different day, I give to the same person 1,73,070. Definitely 40A3 will be disallowed. Guys, but the beauty is, you need to understand one thing. 40A3 disallowance. For me, I am paying, no. For me, 1,70,000 will be added. That's okay. For me, 1,70,000 will be added. That's okay. What about the receiver? This entire transaction is 2,10,000. Correct? He is actually, let's say I'm selling an asset or selling something at 2,10,000 rupees. And you are giving me cash 10,000, that's okay. Then suddenly you will give me cash 1,70,000. For you, 1,70,000 is disallowed, that's okay. But for me, that also they can ask in MCQ. You see, 269 ST and 271 DA will come. 269 ST will says anything which is more than 2 lakh if you are collecting per transaction in cash, then 271 DA penalty will come. What is the penalty? Up to the amount of the expenditure. A penalty can be 2.1 lakh actually. Deadly. Right? That's what I'm trying to tell. So guys, here the modes that are given are same like before, other than cash, which means it can, other than, not cash, other than account pay check, account paid bank draft. So what all is allowed? Account pay bank draft is allowed, account pay check is allowed, then Beam, UPI payment, all those things, Paytm, all these are allowed. What is NEFT, RTGS, IMPS, everything is allowed. What is not allowed? Cash, cross check payment not allowed, all those things. Right? Yes. Now, but there are certain exemptions and there is one rule, correct? In that rule, which clearly says Rule 6DD, there are certain exceptions to this particular thing. What are they? Apart from that, there are other things also. If I am flying, hiring or leasing goods carriage vehicles, limit shall be 35,000 rupees and not 10,000 rupees. For them, that's it. It's okay. Let's make it 25,000 and it's not 10,000 because in goods carriages, etc., they will not have facility, banking facility. They'll not. Nowadays, anyway, with Paytm, everything becomes as simple. But this change came a few years ago, where they told, sir, I'm going to these remote villages where there's no facility, no internet connection. Also, that time when I have to make payment, I cannot, more than 10,000 is very less. Make it more than, if it's more than 35,000, disallow. At least up to 35,000, you should allow. There were petitions made to the finance ministry, which they eventually agreed. So for payments made for what? Flying, hiring, leasing goods carriages, limit shall be 35,000 rupees. Right? Very simple. So apart from that, if I make the entry also in a different way, I make an entry also in a different way, where I will allow the expenditure in accrual basis. I'll make an entry expense to expense payable. Normal expense payable sum 15,000. Next year, I will make expense payable to cash. So though there is no expenditure here this year, but I have paid cash more than 10K. So this happened in 22-23 and this happened in 23-24. Disallowance will happen when is the question. So if you see, this is what this section says. Such a payment shall be deemed to be the business income in the previous year in which such payment is made. This is 40A3A. So in this year, my dear friends, this year, though it is expense payable to cash, this 15K will be charged to the income. Why? In 22-23, I have allowed this as a debit to the P&L account full. This year, 23-24, I will have to credit to the P&L account 15,000 rupees. Got it? It may be noted that where payment made is less than 10,000 in respect of an invoice which is more than 10,000, disallowance shall not be attracted. No problem. Payment per day can be less than 10,000. No problem. 43(1) also discourages payments made otherwise than by specified modes where the sum exceeds 10,000 to acquire a capital asset. We have already seen. But these exemptions, no, Rule 6DD will apply only to 40A3 expenditure and not to 43(1). So if you buy an asset by breaching these regulations under Rule 6DD, still there will be you have to reduce it from the actual cost because Rule 6DD is only applicable to Section 40A3. So no disallowance shall be made under 40A3 where payment is made to RBI, Reserve Bank of India, State Bank of India, Cooperative Bank, all these things. So SBI will be sleeping Bank of India it's called. Suddenly when they'll wake up, if payment is made to them, no problem. They'll take come after lunch break, they'll tell. But again, after you go after lunch break, then yes, this is what it is. Then any agricultural society, LIC, all these things, where payment is made to the government, no problem. You can pay any amount. Then you have LC, then book adjustment, bill of exchange, all these things. You can go ahead with that. All this, in our regular batch, will go more in depth. This you just go through. But one interesting thing is what? If payment is made to the cultivator, grower, or producer of agricultural or forest produce of animal husbandry, fish or fish products, horticulture or apiculture. In these cases, guys, definitely you can make payment provided he is a primary producer. Primary producer means what? He is producing the entire goods primarily. This background was changed. Sorry, let me change back the background to what it was. Fine, this is fine. It was green only, suddenly it got changed. Right. Jacket also changed. Background also changed. Person is the same though, don't worry. Right? Yeah. So products, horticulture, apiculture, all these things, yes. So guys, this is, mind you, if an agricultural producer, that is farmer, sells it to Reliance Fresh and you pay 15,000 cash to Reliance Fresh, is it allowed or disallowed? Disallowed. Because payment should be made directly to whom? Cultivator, grower or producer. So if you have a deal directly with the, let's say your ITC hotels, you directly go to the primary producer and say, sir, whatever is in your village, whatever fields, directly it should come to me. I will pay you cash. Can you pay more than 10,000? Yes. Yes. Fish or fish products. Guys, I can ask you one question in fish or fish products. What used to happen was payment was made to the head fisherman. Head fisherman will collect fish from all the fishermen. He will make it into a heap here and he will sit in the market to sell. So he will know 10 kg came from one person, 15 kg from one person, 5 kg from one person, like that he will put heaps and sit there. Then he will start selling one by one. Now, payment made to head fisherman is not made to cultivator, grower, producer because his share in that is only very less. He has collected from others. So if I am ITC hotels, I am in Kerala, ITC hotel Kerala. There is one Taj hotel, Taj Bekal. There is an area there. There is Bekal Fort. So there is one hotel. This thing, property, Taj property. Now Taj hotels will go to that head fisherman and say, all this fish I want for my guest, you give me. How much? 2 lakhs. Take 2 lakhs. Cash. AO used to disallow it. So people went to the finance ministry and said, sir, head fisherman is like cultivator grower only, sir. He's just collecting from everybody and selling. Please give a circular. So a circular was released saying fish or fish products, cultivator, grower, producer will include head fisherman also. So payment made to head fisherman not disallowed. Fish or fish products. AO was disallowing payment made to fishermen for selling prawns, crabs, other forms of marine life. So they disallowed. So crab went and said, what did I do, bro? I'm already dead. At least let them pay cash and pay me. Prawn started crying. Crab started crying. They said, okay, take it. So even for prawns and all, what fish or fish products, what do you think? It is possible. So fish or fish products includes everything, guys. All the other forms of marine life as well. Octopus, whatever you want to take. Products of horticulture, octopus is not there. I'm just kidding, right? So you have your crab, prawn, other things. There are various forms of fish, squid, all these things. The squid game. The product of horticulture and apiculture. Horticulture means fruits and vegetables. Apiculture means bee rearing, bee, honey bee. So where you take the produce. What is the produce here? You will not eat the bee. You will eat the honey, right? That one. Where the payment is made without the aid of power to cottage industry. All these things you go. And guys, this again is one more point. Where payment is made by way of gratuity, retrenchment, compensation, other terminal benefit. I can make payment to any employee for gratuity, retrenchment, compensation, etc. or to him or his legal heirs if the sum payable does not exceed 50,000 rupees. The sum payable does not exceed 50,000 rupees. So up to 50,000 I can make. More than 50,000 if I make in cash, disallowed. So if you are into merchant navy, you are in the high seas already, and you are not in a place where your normal place of duty is. You have been deputed to one more ship. That time there is no bank account on that ship. There is nothing there. That time I have to pay you 1 lakh rupees, and you have just joined that ship as a consultant because you're an employee in some other company. Whatever the deal is, now I have to pay you 1 lakh rupees minus 30,000. TDS have to deduct on behalf of the other company, which has hired you. Now, where a payment of salary is made to an employee after TDS, when such employee is posted for a continuous period of 15 days or more in a place other than his normal place of duty. Somewhere else you are working or on a ship. I just combined both and told you. In ship also you can go somewhere else, or normal work also you can go somewhere else. Anyway, in a ship, if you are there where they don't have access to bank account, etc., they'll pay you cash after deducting TDS. More than 10,000 rupees, no problem. Does not maintain any account in any bank at such place or ship. So basically, ships also have account. What do you say? Bank accounts. Banks they have. So when I had gone to the Europe, I had gone for a cruise. There, I was wanted to swipe something. It was not working. He said you can withdraw cash. I'm like, where? He showed me behind. There were some 3-4 banks already. ATM machine and all was there in the ship. So of course, if this fellow doesn't have a bank account on that ship, then what to do? Cash can be paid. No problem. So other things are all fine, guys. No problem. 40A3 shall not apply in respect of expenditure for which no deduction is claimed like any capital expenditure. So capex will be coming under, already discussed. For capital expenditure you have section 43. Oh, sorry guys, that time I told 41, my bad. 43.1 I meant. Actual cost 43.1. 41 is deemed profit. Sorry. So asset more than 10,000, 43.1. It will be reduced from 43.1. Right? 43.1 actual cost. And also, if I have already claimed, like for example, section 35, scientific research expenditure, capital expenditure, I have already incurred for my research, and I have taken 100% deduction under which section 35. If that be the case, can I again claim, what do you say, there in that case, I have already claimed full, not depreciation, but I have already taken a 100% deduction. Correct? Then 40A3 will apply only if payment is made otherwise than specified modes. So if I have bought a scientific research expenditure more than 10,000 with cash, then this particular section will come. Now, can I, instead of paying you directly, I will deposit 1 lakh rupees in the bank account. I'll deposit cash in the bank account of the other person. Expenditure rather than paying you directly, what I'll do, I'll deposit cash into your account. Is it treated as payment made to bank account or payment made in cash? This also went to court. That fellow said, sir, I made a payment to bank account, State Bank of India or Reserve Bank of India. I made the payment to them. No, you didn't make payment to them. You made a payment into the account of another person. Your payment is mod. If they have any charges, etc., have to pay something, then you can pay. Repayment of your loan you have, you are paying that money. It's not even an expenditure. But here you see, if anybody's expenditure is like 1 lakh, and rather than paying him through bank account, you are actually depositing cash into the bank. Will it come under 6DD? No. Deposit of cash directly into the bank account of the supplier does not fall within the exception listed under 6DD and will be liable to disallowance under 40A3. Right? That is what the entire section tells about. 40A3. So they'll give one more example. Infosys is paying money to the bus who are plying employees, who are not plying goods, employees. And they have made payment in cash 34,999 rupees, just to confuse you. 10,000% it is disallowed. Why, guys? It is only plying of goods, not people. All these are important. So for a farmer, can I pay more than 10K? Yes. But less than 2 lakh I should pay. No 48 disallowance. And guys, for the farmer, this 269 ST and 271 DA also will not come. There's an exception. And they need not give their PAN also under 114B. These are all the things. Even if I do this scam, advance to cash and purchase to advance, obviously ultimate entry will be purchase to cash only. It is with respect to an expenditure. That is why 48.3 will be covering there also. Got it, my dear friends? Yes or no? Come on, fist bump all of you. Good. Moving on, my dear friends, as far as the funds are concerned, so let us come back to certain reductions under 36. I've made a chart which will help you understand really well. So funds are of two types. One is approved or recognized funds. Other one is unapproved funds. So approved funds, you have 3614, 3615A, 3614A and 3615. No need to remember the section numbers, just remember 36. So first is what? Employer's contribution. Correct? And that is the recognized provident fund and approved superannuation fund. Generally, when you are contributing, employer will contribute, employee also will contribute. So let me just show you. Let me open CA inter material and show you that portion so that you will understand. Right. So how does it work? So you will pay all these things: gratuity, pension, leave, encashment, etc. Provident fund, there are two types. One is public provident fund where anybody can invest, and of course you have the EPF, employer provident fund. As far as the employer's provident fund is concerned, there you go. Employer will contribute, employee also will contribute. Employee's contribution is taxable but eligible for reduction for the employee under ATC. This is for the employee I'm talking about. As far as employer is concerned, he will up to 12% of salary is exempt, and any excess, it is taxable in the hands of the employee. This entire thing that you studied in CA Inter was from the employee's point of view, but employer's contribution from the employer's point of view. So it's an expense, right? If basically you have to pay you salary of 1 lakh and 10,000 rupees extra have to contribute to provident fund, then that 10,000 rupees is extra. That extra portion is allowed under 3614. That is what we are discussing. That's it. Very simple. Okay. So if you see, one second. Employer's contribution, recognized provident fund, approved superannuation, all these things are there. Yes. Employer's contribution 10 lakh to bank. Then salary 1 crore, to bank 90 lakh, to employees contribution. Then employees contribution to bank. This is the entry that I will do in case I have to use the employees contribution. Employer's contribution directly I will do employer's contribution 10 lakh to bank. This employer's contribution, is it allowed? Yes, it's allowed under 3614. But from the employee also I will deduct, no. Salary 1 lakh, 1 crore, bank 90 lakh, employee's contribution 10 lakh. Then employee's contribution to bank 10 lakh. What about this employee's contribution of 10 lakh? Basically, this is embedded in the salary 1 crore. 90 lakh will be salary, 10 lakh will be employee's contribution. My dear friends, 3615A says that employee's contribution will be taken as income. Employee's contribution will be taken as income. Why? Because eventually it will be given to the bank. Right? So basically they are trying to tell that employer's contribution 10 lakh fully allowed. As far as employee's contribution also equal amount they will deduct, right? So anyway, when I am debiting full salary 1 CR, I will show the employee's contribution as an income. So basically guys, 90 lakhs is salary, 10 lakh is employees contribution expense, 10 lakh is employees contribution income. That's what they're trying to tell. That is income as per 224.10. And again, obviously in 3615, that is also allowed. So it's knocked off. Income 10 lakh, expense 10 lakh, knocked off. Then that mind you that 10 lakh is included in 1 crore. So it's just to make you understand, that's all. This is irrelevant. Employer's contribution can be ignored. What is more important is employer's contribution. Similarly, employer's contribution to pension fund under ATCCD. 36,148. Under that, if it is less than or equal to 10% of salary, and salary means what? Basic plus DA, which is part of the terms. So 36,148, pension fund, any employer's contribution to pension fund will be allowed or disallowed? Will be definitely allowed as long as it is up to 10% of salary. Basic plus DA, part of the terms. 3615 says contribution to approved GF. GF means not girlfriend. The only GF CA fellows will know is gratuity fund, right? So 3615 to GF. Then what is the entry? Gratuity account to gratuity payable account to bank. So this based on actuarial valuation, whatever the amount is, it is definitely allowed, my dear friends. This is with respect to approved. What about unapproved? Unapproved, right? 37.1 generally said yes, even contribution to unapproved funds is allowed because it is wholly used for business, not for personal purposes, and it is for, what do you say, it is not an expenditure covered under 3236. Government was not happy with this because Supreme Court also said it is allowed. So to curb that from happening, 40A9 was brought about. Under section 40 capital A9, they say that it is not allowed. It is disallowed. Any contribution by an employer to an unapproved fund will be disallowed. So basically, why? Because unapproved fund used to use that money and invest it in some useless things like, equity shares, etc., high risk investments. So to curb that from happening, now they have told nothing doing. So unapproved funds disallowed under 40A9. Approved funds allowed. So gist of the story. 40 capital A7 and 40 capital 9, A9 both are there. 40 capital A9 in this gratuity fund is not covered because gratuity fund is merely a book entry. So in 40A9, what all will be disallowed? Provident fund, pension fund, other things will be disallowed. Gratuity fund is not disallowed under 40A9. Gratuity fund is disallowed under 40A7. So contribution to unapproved gratuity fund will be disallowed under 40A7. When is gratuity fund allowed? Either it has to be approved or it should not be a mere book entry. Means if it is payable during the year and it actually are paid during the year, where employers are retiring during the year, employees are retiring during the year. If employees are retiring during the year, if I make an entry and pay it on time, then it is allowed. So when is it disallowed? Only when, what do you say? 40A7 comes into the picture. Disallowed when it is transferred to unapproved fund. If it's approved fund, no problem. And gratuity, you can claim on accrual basis also, on payment basis also, because it should be linked to 43B. Is it on accrual or is it on payment? We'll see 43B and understand. So 37.1, that's all about this entire areas that we were discussing. All that, yes. Coming to 37.1, my dear friends, all expenses under 3236, if it is not covered, it will come under 37. Capital expenditure will not be there, but it should not be in the nature of personal expenditure. It should be wholly used for the purpose of business, undoubtedly. What about expenditure to carry on illegal business? So if I am having by day, I am operating pharmacy, I am giving Dolo and other paracetamol. By night, I am operating joint family. You know what I mean? Joint family, correct? Where they only do snorting and other things. I am giving all these weed, hashish, marijuana, cocaine, all that I am selling. The expenses to give it to the street vendor, the expenses of hiring a vehicle and distributing it to my customers, all these things will be disallowed. Expenditure also is disallowed under 37(1). Anything that you have used to, do anything illegal will be disallowed under 37(1). Specifically, there is a disallowance under section 37(1). So 30 to 36. So we'll see that particular thing. 37. General deductions 37. Page B 43 in our material. Any expenditure not being in the nature of 30 to 36, yes. Should not be capital, yes. Should not be personal, yes. Only and exclusively for the purpose of business or profession, yes. Shall be allowed under section 37. It's a general deduction section. Your telephone, printing and stationery, electricity, audit fee, all that will come under 37. Now there are certain explanations to section 37. Explanation number 1 to 37. Expenditure incurred for any purpose which is an offence or prohibited by law in India or outside India. Expenditure incurred for any purpose which is an offence or prohibited by law in India or outside India. As I told you, any expenditure which is illegal, not allowed. Providing any benefit or perquisite to any person also. Like generally, Indian Medical Association has come out with guidelines saying that asking the doctors not to charge commission for issuing medicines. Basically, it's a huge scam. Actually, it's most of the doctors do it. So, one pharma company will come and tell, sir, my medicines only you give to the patients. If you give, 10% cut. So, even though that medicine may or may not be effective, that's secondary. But since he's getting commission, there's a vested interest. Hence, he will issue that medicine only. This is in violation of any law or regulation. So, the pharma companies used to pay commission like this. Dolo, there was an allegation against Dolo. During COVID too, we used to take Dolo like some chewing gum, if you remember. Like one chocolate we were eating, every day Dolo. So, Dolo apparently paid 1,000 crore worth of commission to all these doctors, etc. for prescribing Dolo. Now that 1,000 crore they used to debit to their P&L account saying business expense. What they used to say, whatever terminologies they used to give. Is it allowed or not allowed? What do you think? It says yes. Anything in violation of any rule or regulation, etc., governing the conduct of such person will be in violation of the law. Apart from that, even if I use any compounding of any offense, compounding means what? Whenever there is a law which says fine or imprisonment or both, this is called compounding. In order to avoid imprisonment, I can pay fine. So even if this compounding fee I have to pay. That fee if I paid also, people were allowing earlier, now they say nothing doing. So it is definitely not allowed. Because it's an explanation 1. Similarly, explanation 2, as far as CSR is concerned, any expenditure incurred on activities relating to CSR as per 135 Companies Act is not allowed as a deduction under 37. But expenditure under 30 to 36 will be allowed because it only overrides 37. And donation made under section 80G will be covered basically even if you use CSR. Why isn't CSR allowed? Guys, because CSR as per Companies Act, every company beyond a threshold, listed company, then any company with net worth more than 500 crore, all those things are there, turnover 1,000 crore, they have to mandatorily donate or either spend 2% of their net profit as CSR. If I allow that to be debited to my tax P&L account, what will happen? I will get a tax benefit of 30% of 2%. So it will be like 2% I've spent, 30% on 2% I got deduction, which means technically I spent only 70% of 2%. 1.4% I have spent, 60%, 0.6% I have got deduction. That is not allowed, so it's disallowed. So under 32, 36, if anything comes within CSR, it is allowed. 37, not allowed. However, this section does not override 80G. Under 80G, you can still take a deduction. So technically, you can still take a deduction. But Two things you cannot take deduction. One is Clean Ganga Fund and the other one is Swachh Bharat Kosh. For that you cannot take any deduction. That is what they say. So if you see, what will overlap, I'll tell you. One is the PM National Relief Fund, PM Cares Fund, and the Swachh Bharat Kosh and Clean Ganga Fund. All three can be used in CSR. All three are not allowed under 37(1), but they are not allowed under 30 to 36 also. But PM National Relief Fund and PM Cares Fund are allowed under 80G. Swachh Bharat Kosh and Clean Ganga Fund, can you claim in 80G or not? If you have taken it in CSR, you cannot claim. If you have not taken in CSR, then you can claim. Most important. Many people, what they study, Clean Ganga Fund and Swachh Bharat Kosh, not allowed. Close. No. Example I'll give you. See, 100 crore is my 2%. Means what? I have to actually spend 100 crore. My profit is, so much, of which 2% is represented by how much? 100 crore. 90 crore I will use other CSR activity, that you leave. 5 crore I will use for Swachh Bharat Kosh and 5 crore for Clean Ganga Fund. Is it part of CSR? Yes. Since it is part of CSR, it is part of that 100 crore. 90 crore I use for other things, that you leave. 5 crore for Swachh Bharat Kosh, 5 crore for Clean Ganga Fund. These two I have used already. Will it be there for CSR? Yes. Is it there for 80G? No, it will not come for 80G. Similarly, apart from this 100 crore, I have spent 1.5 crore for the Swachh Bharat Kosh and the 2.5 crore for the Clean Ganga Fund. Extra. I have not taken it as part of CSR. Why? Because CSR I had to spend only 100 crore. 100 crore I have already spent. So CSR I have to spend already. I have already spent. So 1.5 CR towards Swachh Bharat Kosh, 2.5 crore towards Clean Ganga Fund. CSR not applicable. 80G will it come or not? Yes. Mind you guys, if Swachh Bharat Kosh and the Clean Ganga Fund is used for CSR, then it will not come under 80G. If Swachh Bharat Kosh and Clean Ganga Fund is outside the purview of CSR, in this example I paid more over and above CSR, then only I will take it into account. Do not get confused. Hope you got the point, my dear friends. So as I told you, business expenditure is not allowed if it's illegal. But what about business loss? So there was a case, T.A. Qureshi, as I told you, early morning, throughout the day, pharmacy. Evening, breathe easy. What breathe? Snort. Right? And income tax authorities came and seized the goods. Confiscated, not even seized. Seize means just take away the possession. Confiscation means taking the ownership. They have confiscated goods worth 1 crore. That 1 crore, this T.A. Qureshi took it as a business loss. And he claimed it against his other income. Paracetamol income, he claimed it. Government said, hey, how is it possible? It is cheating. Then he said, no, read the law. Law says expenditure is not allowed, but I can allow loss now under 72. That went to the court and court said, yes, you are right. So very important to know, business loss is different from expense incurred towards business. Where an income from an illegal business was assessed to tax, loss arising from such business was deductible. Allowability of loss continues to hold good even after introduction of explanation 1 to 37. Explanation is only confined to disallowance of expenses, not for other things, is what they say. And any advertisement in publications of a political party, there will absolutely be no deduction will be allowable to such advertisements, souvenir, brochure, etc. But guys, it's one scam. In 37 2B, it is disallowed. But all donations are allowed as deductions under 80 GGB or 80 GGC. Allowed under 80 GGB or 80 GGC. So under 37(1), Any income tax paid, interest paid, penalty, fee, etc. is already will be disallowed under 40A2. Will be disallowed under 40A2. Just a sec. We have seen this 40A1, A2 the other day. We'll again revise it shortly, don't worry. We'll revise it. 40A1, A2, we'll still again do it. No problem. It's not recorded here. I will record it and give it to you. Don't worry. This OneNote is damn annoying, guys. I'm still old school. I still use laptop, though I have kidney. I've sold and bought an iPad. Somehow I like using this. I'm very comfortable with this. Anyway. 37.1. Income, interest, penalty, fee. So income tax paid, 40A2 disallowed. We'll see that even DTA benefit is disallowed under 90, 91 and 90A. Right? So any income tax paid will be disallowed. Other laws, if there is any tax paid or interest paid or fee paid under other laws, if it is compensatory in nature, it is allowed. Penal in nature, if it is willful default, it will be disallowed. So what do you mean by that? Compensatory in nature, willful in nature. I'll discuss that. I'll discuss that in one other case. GST and other taxes allowed under 37.1. So GST, etc. expense if you do, that's definitely allowed. Demurrage is another name for charges. It is allowed under 37.1. Breach of a contract. If there is any breach of the contract, if it is for delayed performance, whatever amount that you have paid will be allowed. If it is failure to perform the contract, then it's a breach that whatever amount you pay is allowed. Penalty in the nature of compensation. I told you compensatory payment. Mandava Vanaspati and Chemical Supreme Court judgment. What happened here was Maharashtra, in Maharashtra, the, what do you say, for a particular contract, they were charging, Maharashtra government was charging 4%. But for this company, Mandava Vanaspati, they charge 2% rate of tax, some local tax. So, for example, this Mandava Vanaspati, instead of paying 4 lakh, they only had to pay 2 lakh. But, and that goods, etc. has to be only not exported outside, but only used in Maharashtra. What happened if there was found breach there, any breach was found, then the Maharashtra government said 125% penalty you have to pay. These Mandava fellows took use of this benefit. They produced the goods and started selling outside. Maharashtra government came to know, they imposed 125%. 2 lakh anyway they'll pay. 125% is what? 2 lakh more plus 50,000 extra. 2 lakh 50,000. Overall they paid 4.5 lakhs. This 4.5 lakhs they debited to their P&L account chain. Everything is allowed. Now question is what is allowed, what is not allowed. 2 lakh initially fully allowed. Then in that 125% extra, it will become 2 lakh 50,000. In that 2 lakh was compensatory in nature and that was allowed. Because this 2 lakh to 4 lakh is just a compensation. So I would have, to normal other people, I would have charged 4 lakh. To you, I charged 2 lakh. So to reach from 2 lakh to 4 lakh, compensation. But over and above 4 lakh, it's punishment in nature, punitive. So that extra 50,000, that is penal in nature, that I will not allow. That is called disallowed. So anything which is punitive in nature, disallowed. Compensatory in nature, allowed. Hope you got it. If there is any interest in default in paying TDS, disallowed. 234 ABC, disallowed. Interest on loan taken to pay income tax, disallowed. Other cases, penal interest paid, allowed. If you have taken a loan to pay income tax, disallowed. Other cases, allowed. Then fee, TDS filing fee, scientific research filing fee. You have to file the Form 10, Form 10 series. 234 EFG, you will file, fees for interest, this thing, TDS, etc. It is neither interest nor penalty, and ICAI allows it. Important point. ICAI allows this in the exam. You also allow. If you want to be allowed into ICAI books as member. Right? That is what it is. So foreign company data 20 lakh to bank 20 lakh. They forgot to deduct TDS. Foreign company data 2 lakh to TDS payable 2 lakh I did. Then TDS payable 2 lakh to bank 2 lakh I did. Then I made bad debts. Bad debts 2 lakh to foreign company account 2 lakh. Just think about it. Under 37(1), is this expenditure allowed? No, because this expenditure was incurred due to failure to pay TDS. They forgot and they created one expenditure 2 lakh. It is only to failure to pay TDS, hence disallowed. Other two sections we'll see later. We haven't done the bad debt section, that is 617 and 40A1. Other cases, website expenses of a travel company. Is it capital nature or revenue in nature? So the court held it to be revenue in nature, even though the main item for the travel company is the website. Prior period expenses generally will be disallowed under 37(1). If it is regarding embezzled, then it is allowed because it's a loss under 37(1). If prior period items are crystallized during the previous year, then it is allowed, which though it's not technically a prior period item. For example, arrears of salary. Arrears of salary for all these years I paid now. It is crystallized during the previous year, hence allowed. Retrenchment compensation. If the entire business has closed down and any retrenchment compensation paid by the company to the employees is capital in nature. On the other hand, in Ravindranath Nair case law, 4 out of 10 businesses were shut down, 6 businesses are still running. So retrenchment compensation paid to them was allowed under 37(1). Employee is a top employee. I am giving him golf package. So company is sponsoring his golf membership. Company paid for golf membership. It is for the benefit of the employee, hence covered under 37(1). If I have a glow sign board I have, and everywhere I have put my glow sign board for my company, and that glow sign board will keep on reducing in value. Sometimes it will keep on flickering and I have to keep replacing. Is it capital expenditure or revenue expenditure? The court ruled it to be a revenue expenditure. So whatever name you call compounding fee, regularization fee, whatever it is, nomenclature does not matter. In the eyes of the Income Tax Act, it is a fine. So under 37(1), we have seen very clearly now, it will be disallowed. Disallowed. Everywhere it will be disallowed. Provision for diminution in investment assets, impairment of assets under Ind AS 36, provision for deferred taxes disallowed under 37(1). All these are based on decided case laws. Dividend or DDT, expenses towards that disallowed from 1/4/2020. Provision for subsidiary companies loss put in the holding company disallowed. Salary and perquisites given to directors are allowed subject to 40A2, which we did. 40A2 is excessive payment. All these things. This is what we have seen. So now we'll have to study something with respect to the bad debt and of course bad debt recovery. We'll have to study bad debt and bad debt recovery. Let's do that, my dear friends.